Another day in paradise, I'll say. It was this Friday. I got more than 40 points, 40 points today. It could be better, but because I took 4 stops today, it was a day that it was not easy because we have low probability events in it. So eventually, failed wedge are the kind of stop that I took. So in this recap, and before going and watch the recap, please click the like button. This is a ad hoc work. You're not paying for it, but I think that it's useful for you to watch this video for today recap. And share with somebody else that you think that will need it to review your trades versus what I did today. I'm really looking forward for your comments in terms of what trades you take or what trades doesn't make sense according with your view. This is the views trade Brooks Price Action Trader. How we read the bar by bar by bar bar behavior. So you'll see here the way that has been during the whole day, reading the day the bars. Um, what are the best trades for the day, and also as we're connecting what's happened yesterday versus today, we have a good setup to share in order to show you where the elements of the major trend reversal that were present from yesterday that could also help us to anticipate the today's movement. So today's movement makes total sense. It's something that I was waiting for the people that follow me and follow my daily analysis. They saw that I have two main probabilities. The first two probabilities for today were bulls. It was showed today a little bit. It went a little bit far what I was expecting, but you'll see here the analysis for the next week at the end also, and what I expected on a mini. Let's make our recap today. What about that? Okay, let's start with this. I'll record this recap and put it into YouTube. Let's do this recap. If you have questions, please, you can even unmute yourself and make the question live, or just type it out and we'll see, right? So I think that the price action was clear here at the beginning of the day with the bar four. That's a breakout bar. Bar four. I don't like bars that are closing. You always, everyone knows closing as a ball bar or shade bar, as our Brooks says, call it. But this is a breakout bar eventually with a follow through in five. So if you don't get long in four, have you have the five of a breakout confirmation. So at this time, this is a breakout. So breakout is when you have a bar like four, and then a follow through of that bar. That's a breakout. So if you add up above four, you can get long, and this is one of the best trade of the day above five. Well, even the outline I'm gonna put even with blue color just to indicate that this is probably the best trade of the day. Right, let me put this higher and take out the short trade. Okay, so we see clearly here this flag more than 60 bars trading range. Albrook says that when we have more than 20 bars, you can say that the odds are 50-50 for each one of the sides. And also when we are talking about major trend reversal, you can see the videos in major trend reversal. He say that final flag like a trading range like this, 20 more bars, could also lead us to a major trend reversal. If we see this is a major trend reversal. And this is great to see here. We have trending line and review some elements for a major trend reversal. This is a trending line, bear trending line, right? We have the first breakout here, strong breakout in two legs. That's a minor reversal. And then we expect even breaking out the moving average and letting a gap there and a gap here. And this is one of the elements that we always need to see when we're looking for a major reversal. Strong breakouts above moving average and leaving a gap open, right? This is one of the elements that you say, well, when you have a gap like this and you have a breakout, moving the price up above the moving average, then retesting the moving average and having some more than five closes above moving average in gaps here, right? We can say that the probability to have a new low is lower in that case. So first, you're looking for after a wedge here, you're looking for two legs up, as we get yesterday, right? These two legs, we got this trade and we exit here, right? And then you expect to have a trend resumption, bear trend resumption in this case, right? But weaker than you have before. And as we have this element here with the IMA gap, we we can expect not to have a new low, right? So then at the end of yesterday, we saw this structure here, one leg, two leg, and then we have the reversion there and the third leg, right? So we can say that we have a wedge here again. So we finish the day with a wedge, with a lower high. So this is a lower, sorry, a higher low. This is a higher low. This is a higher low MTR setup. This is really beautiful, right? So if you have that in mind yesterday, you can set your strategy for today based on that probably. Now let me put this in another inverse colors, blue and that go be 16. So this is a higher low major trend reversal. Do you have any questions regarding major trend reversal? It's clear for you guys. This is my one of my favorites setup because it gives us always great payoff, right? So you can say this is the wedge if you want it. Um, but for me, it's more 69, 72, 79 because this is 70 part. It's part of the same game, the same move. Okay. So then we have 79 that will be eventually if we are going if we're in the in a continuous trade. I will take that 79 long as a thing as an entry for major trend reversal. So what is the target for a major trend reversal? This one here. This is the main target. The first target is here, right? Because major trend reversal is just a trading range, right? This is the first target here when it started the movement, right? The wedge fair target right here, right? Of course, the height of the yesterday is also target because we are in a trading range. This major reversal is just a trading range. We all know that, right? At the beginning of the day, I say, well, this is a trading range. Probably the price will look for the middle of all the movement. Look where the price is closed in the middle, right? So that's what usually it's done in Milton reversal. When I took a short here, I was looking for this price, like one, like two. Look, see here, that was my target, right? here. We didn't get there, but that was my target that time. Okay, so this target didn't go there. This is another move. This coming here is not about this leg. It's not anymore, right? So, but this is something that we take in consideration because I always say, well, why this fails? It shouldn't fail. Right? We're gonna get there. All right. So Matt, make a question. So first major pullback is the target. Yes. The major pullback is here. So that's the target for him. So you take 4, your target is here and exit it here in 13. Close of 13 with 25 points. So that's the trade, right? In the middle, so you see how the market is. We say, um, if we have a close above this 38, we have this target of minimum 2 because it's a trading range. So the pattern here is a trading range. So you make the measure move your trading range. So some traders are exiting in 11 here, right? Um, because they get this target. It could be that target or could be this one here. Let me tell you. It's more exact probably, right? But that you can use the more conservative one. So if you get 4, you need to be conscious that your target is here in 13 yesterday, right? Basically, we got it here in 13, 14. The market is still always in long here, so we can buy the close in this leg here. We can buy 4, that is the breakout, 4 or 5 are the breakout, and then the next 2 or 3 bars we can buy, okay, like this. And then we need to wait for the first tentative to come down below a bar like 11, so we can buy here with limit order. And then this is a H1 flag, right? We can buy above any signal. This is that signal bar 11. This is a good point too. 11 is a bad signal bar. It's a bad signal bar because it's a bear bar, right? Market usually goes there to um, to test that point, right? That signal bar is being tested here, right? Uh, then we have this spike. So then when we have far 4 breaking out, this is the start of breaking out. So we start counting leg 1, pull back at 11. We look for leg 2 here. So this is the target of leg 2, basically, right? We have a target here also, the close of the daily chart target here. So if you exiting 18, 19, it's okay. I think that it's enough to get out here. Okay. Any questions so far? Nope. Look at the beautiful price action. Oh, after 13, we can buy 13 because it's a H1 bull flag breakout. Okay, this is the bar breakout bar. So we can buy that bar and the 14. The only thing is that the 13 and 14, it's so close to the target. So of course, if you're not seeing to the left, probably you will buy this. I did exit in this bar. It was the biggest bar in all this leg after 4. So I did exit in 13, but then you can rebuy on 14, right? You can buy 14 and make spike and channel 3 legs up in a wedge top. So this is a wedge top, beautiful wedge top. It's a wedge top on final flag, right? see that a final flag from this move, right? And then when you have a wedge, you expect two legs down. One leg, pull back, you expect two legs down. And here is the target. We didn't get there. Why? Because the market didn't want, right? The market wants to do whatever they want, right? Then we didn't have a second leg, especially proportionally with this one, right? We let this micro gap open after that bar 14, and we're moving up, right? So then we have this wedge 1, 2, 3, right? And 41, 42 that we sell that bar. That's well, we sell that bar thinking on we were in a trading range. We probably will have a second leg down, but we didn't have it. So essentially, when you have this um, wedge failed, it's a wedge failed bill, failed wedge bill. Oh, it changed really. The bill it's confirming 42, right? So I did sell here 30, 36, right? I did sell 41, and it took this couple of stops here. Those are the stops that I took there, right? And then and then we when you have a failed wedge and you have a target of failed wedge above, not no there is not top that can really stop that breakout. So you have a great chance of a breakout based on that, right? I still keep my short of 41 above the top because we had these two tiny bars, right? It could be bad follow through, it could be disappointing for bulls, but you cannot buy this 14, of course. But if you're short as it was here in 41, then you need to wait for the breakout. So the breakout both but it was in 45. This you see there's a couple of three micro gaps opens 1, 2, 3, and then this bar 45. So you buy 45 as I did, right? So you get stop it above the height of the day, and you buy 45 or 46, and then you have a breakout. This is another breakout. So the first target always is the faded wedge target, but you're breaking out a trading range also. It's pretty much what is happening here. So you're breaking out this trading range, so you're looking for this final flag trading range target here. It's a minimum. So you can do the same thing. So this is an exhaustion leg because you didn't have a second leg now, so you can project this up, right? But you can also consider that like a trading range. It's pretty much the same thing, right? And then put your target there. So if you're buying here, you know that your target is there. So 61, 51, 52 is the climax, right? So you might exit on 51. I think that I exit in 51 or 52. That's basically the the trade. The only thing here that makes me think maybe I took another stop here and I'm gonna explain that is because this is a micro channel, strong micro channel, of course, finishing in a climax, and here we have the height of yesterday in this area in the Globex. You see here, perfect double top here. Look at this. The Globex, I think that machines are really looking into Globex. So we have this spike here, double perfect double top. So that's a major resistance here. right? So I took a trade below 53, thinking of micro channel, but it was wrong. It's totally wrong, that trade, because we're coming for a climax, and then it's, testing a major resistance. So that's normal to have that climax to get a TBTL or so. So it was a really wrong trade that I took here, right? So, but at the end, you can buy all those bars. The only thing here is so close to the high of yesterday in the regular 10 hours, but this bar you can buy 49, of course, thinking on acceleration up after breaking out the regular 10 hours high of yesterday, right? So those are the breakout trades here, and this is breakout high of yesterday too, and this is breakout trading range, right? I will not I will not take any long here. So we were high versus the trading range. It's, the risk is so high here versus the target, the minimum target. We are with a strong spike here, very spike. I didn't see that trading for the one. I think that the right thing is sell high to get at least somewhere here in 36 where we have some sellers trap out probably, right? Um, um, you can get 48, but the risk is so high, and you were trading against the high of yesterday, so you can even wait. This breakout, put your stop below, and just make a 1 bar trade stop, and then you see this is a high probability trade. You have more than one on one as a reward. Okay, you have a space until the measure move for the trading range, so you can get that one. 651, it's after the breakout. I don't have a space. We don't have a space here. I don't know if we get the one on one of 51. I don't think so. No, we don't, because we were without space versus the higher yesterday. So it's basically that. 54 with 55 is a good spike, so you can take 57 for the second leg if you want it. Okay, but I don't see good reward in that. But if you are a scalper, you want to take this 57 and make one on one of them, it's a high probability trade for scalpers just to get the low of 55, right? That's there. So you can get the low 55, and the low 55 is a target, is also a good entry, a good entry, a good entry long eventually, right? Here I took the trade fading this 61 long, so you can enter here with limit order trying to get the H2 bull flag, right? So close to the moving average. It's 20 GV. We can say that's a 20 GV setup. Okay, and you need to be long everywhere here. Could be here, it could be above 62, right? You need to be long there because that's a flag. So most of the time that flag goes and tests this target as a minimum here, right? But this time didn't work, right? So and this is the kind of stop you take below height of yesterday, probably because 71 you can say, well, this is a wedge, wedge double breakout pullback over the height of yesterday. So 72, if we have, it will have trigger above, will be a great long, even 72, right? But we didn't have a follow through. But this 72 above that is a long, but we didn't trigger that bar. Okay. What else? We have, we can say that we have this H2 here, trigger here, right? And then one and two legs up, right? So one leg, just one leg here. So it's really difficult here to take a decision unless after you have that 73, right? So 73 failing in the moving average of 50-minute moving average here, right? You can say, well, I'll buy that because I have a huge tail, and some traders will say, well, that huge tail means that we have buyers there, so let's buy it. No, guys. If you see that in the 1 minute chart, this is just a pullback on the moving average in 1 minute chart. So you need to sell the close here, 73, because this is a wedge, failed wedge breakout. Doesn't matter that you have this tail, huge tail here. That's a failed wedge BO because the bar closes below the channel line, right? That's why. So this is a wedge fail BO. Put in the market how? In a always in short mode and sell the close mode. Just one bar, right? So failed wedge breakout. Here the market is sell the close. The market is in this way. You just put the stop above the previous bar for at least for the first three bars, like this, 1, 2, 3, and then let it until bar 80, because when we are in the end of the day, what I have noticed with ES is that usually we usually we have two outcomes. One is to keep directionally the movement, or stay sideways like yesterday. Keep sideways, right? If you see previous days, look at this. Directionally, end of the day, from bar 70, right? Or sideways. Another day, directionally versus sideways, and so on. We see here, this is the midday that we have, right? So that's all the potential outcomes that you can expect during the end of the day. So you exit at bar 80, and that's it. Right? Any questions there? What do you feel? What trade would you take, or you took, that you wanted to analyze, or you want to review? Is there any trade that you make that you say, well, will 60 be H2 took, or does this not matter since we have that double top? Yes, 60 is an H2. I talk about it, yes. It's H1, H2 here, flat. Didn't work. Oh, let's say it makes two legs up, right? But I will also buy 65 close, right? Testing the moving average, that will be a good buy too. What else, guys? No questions? Make sense? All right, so what to expect for next week? I'm not gonna be available to exchange for next week, but let's take a look on the daily chart, right? Take a look on the daily chart. Wow, this is another outside bar, I think, right? Let me see. Price is high is 5708.25. 57. Yeah, outside bar, couple of outside bars, right? Interesting. So, to be honest, I do expect to the price to came here 5570 in couple of legs down. That's what I'm expecting. This area here. So continue doing what it's doing is testing moving average. We have more than 20 bars without touching the moving average. So it is right at time that we come here. If you see the climax bar, that's a climax, right? We're coming here to 5666. So we can came here uh, in the next week, I'll say, right? So the only thing that you really have to pay attention is in the next week we will have a lot of trading range price action. So be careful because why is that? Because we have potential taking profit week next week. So it's potential. Of course, we're in a earnings call sessions, right? So we have a lot of companies doing earning calls and showing results. This could in some way impact on the price action, right? It will impact the price action. But if we just read what we have right now here, I will expect more sideways price action, TBTL kind of here, looking for the moving average in 5560 area, or this area here, right? Is we see if we see the last here we see this breakout here, so a brief breakout pullback. We have a kind of negative gap here, so we probably will have a negative gap right here. So testing the moving average and go up from there will be something that for me it's the most probable outcome for the next days. And it's also I'll say recommendable to have that in order that we can get another push up. So I think that we have the first push here, second push here, and we'll look for the third one, looking for this target here, this April TR, the 577. So could go to 55660 and then look for 110 points up for the coming weeks. But for this week that is coming, I will say that it's more probable to have sideways price action. And in that sense, I warn you that you need to be careful on the breakouts and false breakouts that are commons in this kind of of days, right? Like this, for example, here we have a lot of false breakouts in this. So we can have something like this here, okay? Or like this, for example, all right? Look at this false breakout here, was in one day. So this is the kind of things that we might face for the next week, okay? Any additional questions there? No? Thank you very much. Have a great weekend. I'll be traveling, business traveling, so till next week.